Hi, it's Ken here from Smart Forex Education. Today we're going to take a look at the euro dollar on a 30-minute chart. And we're going to focus today on the importance of using and implementing patience in trading. So, importance of patience in trading. You can clearly see from early this morning, or basically late last night, early this morning, we've seen a strong sell-off, okay, where basically supply has outweighed demand, the market has moved to the downside. Now, if you were just zoomed in and you just focused on a smaller time frame, i.e. if we go into a 15-minute chart here, for an example, you can clearly see a massive sell-off. Obviously, sellers are totally in control here. So you need to then say to yourself, what type of time frame trader are you? Are you a short-term trader where you're a scalp, where you're looking to enter trades on the short-term erratic movement? Or are you looking to zoom out of the current view and see what the bigger picture is? So if we go to a 30-minute time frame, and all we're going to do is zoom out here. So by zooming out, you can get a better picture of what the overall direction of the market is. Now, based on this, you'll clearly say, is the market up or down? Well, it's pretty clear. The market's to the downside, yes? Sellers in control. But that's based on today's movement. By zooming out, you can clearly see that this is just a sharp pullback from an overall strong upside trend, which basically commenced from about the 15th, the 17th of January. Now, taking that into consideration, what we like to do at Smart Forex Education is let the market come to us. So what we are, number one, we're patient. We'll wait for the price to move to our specific location, which will provide an opportunity for us to enter the trade. So what we do is we utilize a couple of unique softwares and trading strategies that we have. But basically I want to actually go over a very simple setup that we use in conjunction with other trading price action, and which shows fantastic returns in the market. Now, very quickly, just pull up a lines chart, add lines, and go to freehand. All I want to do is demonstrate the reason behind the current trend. So if you take a low from, let's say, the start of the trend, or the low, back to the 16th, or alternatively, we'll take it to the 16th, yep. And then we're going to drag this first low point to the next higher low. Okay, so remember, you're taking 2 points. You're taking the first low point, and then you're connected to the second high low point, or significant low, which we've taken here for the second point, and we're looking to see what the current direction. Now, it's not rocket science to see that this market has done that, right? It's been a strong move to the upside. So all we want to do is we want to trade in the direction of the overall trend. You're two types. You're either a counter trend trader or you're a trend trader. Now, in certain situations based on, for example, important fundamental news or some strong areas where buyers are getting sucked into trades at the highs, you can try and look for a counter trend trade, but you want to have a high probability moving in your direction. Alternatively, just look to trade in the direction of the overall trend, which is the upside. So this was a very simple setup. So what we did here, we said let's utilize our Fibonacci retracement. So go to lines, add Fibonacci retracements, then click on freehand. So we took it from a low, significant low point, and we dragged it all the way up to a significant high point. So I'm just going to take you here, just to see the level where price can hold. So then we have the percentages in place. We'll click OK. So prior to this price, which held at 1500 hours CET time, prior to the price holding at the 25% level, we had this retracement intact already. Okay, so as soon as it made a new high, as soon as we put on our charts, we had drawn in the retracement level. So it's early this morning. So that's about 8-9 o'clock this morning. We had this level in place. And what we didn't want to do is just jump into a trade and enter the downside. Fair enough, it's seen a nice strong move. We wanted a nice setup where we put a passive order, so a passive limit order, which improves our entry. So we're getting a good location regarding the entry setup. So we had a buy order just 2 or 3 pips above the retracement. So it was actually at 13085. So $3,085. That was our buy limit order that we had in place, okay, which was basically about 3 pips above our retracement level, the 25%. So we knew that there were going to be some traders that were looking to try, and more the commercial institutions that were looking to try and buy on the lows of the day. And coincidentally, the snap theory system, the lows tested the lows of the previous day. Okay? Is everyone with me here? So is that making sense to everyone? So we're getting a snap theory situation where the markets tested our retracement level, and in conjunction with that tested our support horizontal trend line, which increases the probability of a trade. And we look at other variables before we decide to enter the trade. So we've gone to the trade here at 13085. Anyone can enter a trade, as we know. What are our exit targets? Well, what we do here, you go to lines, add Fibonacci retracements again, and we take the retracement from a high point down to a significant low. Okay, and we're looking to see whether the price can test our first retracement where we can scale out. So we had targets, when we were in a trade, we had targets to scale out of the position just slightly below our 25%, which was at 13115. That's 25%. That was our first target. Okay, so first target was to sell out the position just below the 25%. Our second target to sell out the remaining of our position was located at the 40%. Okay, so first target, I'll write this down here. So we had first target 3 pips below the 25% level, fib. And then we had the second target, three pips, again, same 3 pips, but this time below the 40% level of the fib, where we sold out the remaining contract size that we had in place. Okay, so as you can clearly see here, is that what we're doing in effect is that we are maximizing a position on our trades. So if the market moves against us, as soon as we hit the first target, our stop will move to break even. If it tests our second target, well, that's fantastic. So what we're doing here is we're utilizing the important philosophy of becoming patient in the markets. Whether you're trading in the stocks, whether you're trading commodities, Forex, it doesn't matter. Please focus on becoming patient and not chasing or jumping into trades. If you want to find out more about our unique systems and how we actually work and utilize to enter trades and manage the positions and sell out of our trades, then just pop along to www.smartforexeducation.com.